Okay, so we have something like this to work with as we head into the new week. So let's go to the 4 hours time frame, after which we're going to be looking at where the major trend is heading at. And then we can now use the structures we have to now decipher where we will be going as we begin the new week. So the first thing first we want to be doing here is to identify the major trend on a higher time frame, which we are actually looking at. We are looking at the 4 hours time frame, and we can see how price has been respecting the temporary bullish trend line since the beginning of May of this year. We can see our price has been since price climbed that temporary bullish trend line. We've been seeing higher highs and higher low until we saw the move that culminated at 123.40 area, and we are seeing a retracement move to the downside. So we don't know if this retracement is going to go into that bearish trend line, that bullish trend line, the temporary bullish trend line, after which we'll be looking for a reversal pattern that will push price further up. Or is it possible that price will break down that bullish trend line, then a retest of structure could send price go further down to the major bullish trend line we identified on the daily time frame. So for the sake of clarity, I would like to move the chart to the daily time frame so that we can see the major bullish trend line that we identified I think a couple of weeks ago. So this is what we have here on the daily time frame. We have this major bullish trend line, and one thing we don't know at this point is price going to come down into this bullish trend line? Then we look forward to moves that will push price further up. So that we cannot tell here on the daily time frame. Then we need to scale down to a much lower time frame, let's say the 2 hours time frame, to look at how we want to take advantage of any potential as we go into the new week. So this is what we have here at the moment, and we can see that since the beginning of the week, price has been oscillating within the $118 and the $119 area. This is what we have since the beginning of the week. We saw how price has been in this phase, in a consolidation phase since the beginning of the week. So the first thing we want to be doing at this point is to look for a key level that will guide our action as we head into the New York session. So if we look closely into what structure is since the beginning of the month, we can see that we have this area here that has been, let me see, been a resistance here. We have a resistance, we had a support, we had a resistance here, we had a support, support, and then we had someone like a resistance at this point. So with this being identified rather, I want to be identifying a key level at that area. So I will bring out my line chart for the sake of being specific. Then we will look at what we can bring out at this point. So if we bring out our line chart, we have a key level sitting at around 119. I think I should we use 119.50? I think 119.50 will be most appropriate at this point. So 119.40. So allow me to. So this is what we have here. We've identified a key level here at $190.50. So we want to be using this key level as our guide going into the new week. If we look at what happened in the past, we can see that that area had been a strong resistance at one point in time, which pushed price further down. Then after price appears to have broken out of that area, we saw it serve as a resistance a couple of times before we saw that outright breakout. And now price has broken down that key level and is right back testing that key level at this point. So one thing I want to be suggesting at this point is that we might be going for the bearish momentum as we head into the New York session. And the only way we can actually take advantage of this move is for us to look for a signal, then a confirmation that will push us to the downside. If we look at what structure gave us during our last week trading session, we saw this move to the upside. We saw a retest. It went up again, climbed up, and then we saw this peak at $123, and then we saw a lower high, which signals a possible reversal pattern, and then we saw a breakdown, a retest of structure, and price appears to be going for the down. So for me personally, this area appears to be more of a reversal pattern to me, which we want to be looking forward to a breakout retest of structure to take advantage of a bearish move as we head into the New York session. So for the confirmation of this bearish, this reversal pattern, we will need a key level, we will need a neckline rather, to guide our actions going forward. So we have this area which has been tested quite multiple of times, will definitely serve as our neckline. And for the sake of clarity, I would like to label that line. So let's just paste it right at the center. We have something like this. Good. So what are we looking out for as we head into the New York session? What we are looking out for looking forward to is a breakdown of that neckline and a retest into structure with patterns that support a trend continuation on the lower time frame. Then we could join the decline to the downside. And if you look at what is happening around this area, we can see that the breakdown will also share a confluence with the bullish trend line, temporary bullish trend line we identified here on the 2 hours time frame. So around this area now, we don't know what's going to happen. Personally, based on the prior leading price action, we want to be looking forward to a breakdown of that neckline, a retest of structure. Then we want to be joining the decline to the downside. However, there's another scenario we can be looking out for, and that is if price breaks above that key level at $119.50, then a retest of structure could send price going to the upside. So here on the US oil, we have two scenarios to play around with as we head into the New York session. So the first one is a break above of the key level at 119. Hold on a second, let me label this 119.50, which a retest of that level will give us a confirmation. Then we would know if we are going to add more position if we do have signs or signal that will confirm that that potential target zone will be broken. So but pending the time that is, we are looking around this area for signals and confirmation going into the New York session. All right, in the absence of none, then I guess we just have to move on to the next pair. So let's go on to the US oil and let's see what structure is giving us here on the UK oil rather. So on the UK oil, we have what looks more, we have a similar scenario here on the UK oil as well. So we want to have a clean chart. So give me a moment to delete all this so that we have something clean to work with as we head into the New York session. So I want to extend this bullish trend line, and let's see how this trend line is going to play out as we move forward. So we can see we have this major bullish trend line here. Let me give this a tick line. So we have the major bullish trend line which we identified on the daily time frame, and we have our supply zone at around $114. So now, as we head into the New York session, we have the same scenario that we are looking out for on the UK oil. So the first thing we want to do here is to identify a key level that will guide our action going into the new week. So the first thing we'll do here is to look left. We have one here and we have another one here. So we want to be choosing $121 area. $121. Yes, I think $121 area is most appropriate at this point. $121 is most appropriate. So let's label this. So we have a key level at $121. So that's that. And this appears to be more like a double top structure. We look at this closely, it looks more like a double top structure. And let's give it a label. So what we have here is this. Let me give you a visual representation of what I'm talking about. We saw the impulsive move to the upside here. We saw price rejected 124.5 area, and we saw the second rejection here, and we saw the breakdown of the key level, which also appears to be the neckline of that reversal pattern. We saw a retest of structure, and then we saw price diving for the downside. And if we look at what is happening around this area, it appears, if you look closely, we can see that price is close to the bullish trend line, and we might be looking forward to a breakdown of that bullish trend line, a retest of that area to push price further down into the major bullish trend line we identified on the daily time frame. So one thing I want to be doing here is this. We have observed our price has been consolidating within this area since the beginning of this week, and I want to be looking forward to a breakdown of that channel, after which I want to take advantage of a bearish momentum. So we want to be looking at this. We have an entry point right here. So personally for me, I will suggest that we do an outright entry at $119.20 with a sell position that looks more like this. Give me a moment. We have a sell position that looks more like this, and then we could have our take profit target for the meantime at $113. $113. Let's put that $113 approximately. So this is what my expectations are on the UK oil. So we have around 600 pips to catch if price moves as expected. Now, on the contrary, with the key level sitting right around that area, if we see price break above that key level at $121 area, and we see a retest into structure, then we will look for a reversal pattern in the form of a double bottom, inverse head and shoulder, 1 to 3 reversal pattern to take advantage of a trend continuation to the upside. So we have two scenarios here. So the second scenario will be having an entry point right above key level here at 121.46. That is, after the confirmation has been made, then we'll have our take profit target still remaining at $130. So allow me to label this area. We have $130 here, and we have somewhere around here. So we have our stop loss right below previous structure at around 130 pips, and we have a take profit target of around 150 pips. That's an approximate of risk ratio of 1 to 7. So